see what we can do.
Fluffy, fluffy, duffy, muffy. Okay. Well, we will see. Let's make sure this is all set up. Hey, what's up? Yeah, well. Hey, hello. Watching the close here. I think it's a really important close, so that's why I wanted to watch it. If we can stay above 626-ish, I think we're going to be in really good shape. I'm a little nervous because we still got a lot of time left, and we're seeing some volume spike right now on this extension, and I think it's a bit parabolic, a bit wide, you know, like a narrowing. So either it's going to squeeze or we're going to see a sharp drop. And I think based on where we are, we're sort of looking, I meant 726, sorry. If I said 626, that's not what I meant. Just a misspeaking. So I think we might see it reject here at 752 and then have a pretty hard turnaround. The big thing is, in terms of range, we want it to be around above 725 on close, because if it drops back beneath it, that would basically just be very similar to a UT or a UTAD. I'm not saying that's what it is right now. I'm just saying, like, you don't want to see that. So don't mishear me. And then big picture, like, I did a video about this yesterday and posted it, and it's very straightforward. You basically, it's the same deal. It's no different, the same chart, basically, but with a slightly different, bigger picture look at it. And right now, you want to sort of see it stay and maintain where it is, essentially. Like closing above this creek right here, which is so significant, would indicate a possibility of a major turnaround. And I think you can see why. I think it's very self-evident, you know, if you've been watching stocks for a while. But if you're not sure what I'm talking about and you didn't see the video, this could have been an S-curve breakdown. And all that's really required would have been to get kind of stuffed beneath that 725 area, 730 area, and or, right, because really you could have multiple moves here. Having that kind of flush back down through, because a distributive action will often do that. Like it makes you think it's going above, and then it starts coming down and it doesn't find support. Instead, it like kind of like bleeds through or something, and in like that way. So you gotta sort of see all these different steps happen. So the big thing about this week's setup was if we could get up above 730. And I didn't really care how high it went. So we're at almost 750 now. That's great, but it really didn't matter that much. On this chart, I have it drawn going up to like 740. On this one, I think I took away the line, but I think I had it coming up to like about the same place, like somewhere in the middle of this range. So of this little tiny range here. So I don't really feel like it's that big of a deal how high it goes. What matters to me is that it holds above that major creek. So we jump above it and you're far less likely to see S-curve. Instead, what you see is that this was a spring action and you're going into an SOS phase. Then all we really need is that support again in some way, probably around 732. So even though we're up above here, and it hit the target that I had drawn out for this downward motion. So I'm kind of done with this. I'm going to delete this from my chart. That's this area right here. It got a big recoil. It was sort of expected that it would get there. And we're pushing pretty high here. So we'll see how far it goes. But I would say at this point, it might be prudent for me to do this. Because we really want to see, no matter what happens, I think it would be best for us, I'll just say that, to have it come back down and find support right along the top here. Usually, if it's a strong SOS, what we find is that this happens in like more of a bouncing motion. Does that make sense? So it would be something more like this, where you'll see like volume evaporate. It kind of like extends upward, maybe goes sideways a bit more, and then drops at the end, and then it finds support there and returns and starts again. What you typically don't see in an SOS, but you see in a UT, is it's kind of like reversed, right? You get this kind of really harsh spike that reverses like almost straight back down. So I don't really want to see that. I don't want to see it just drop straight down. I want to see it kind of chew up, trade high. Honestly, if we did that for the last 40 minutes of the day, I'd be pretty happy. Just trade it up here for, you know, a good amount of time. Because typically in a UT, which is called as an upthrust, it's a distributive action, and usually you see that sell candle ends up being pretty massive, and it drives it back down hardcore. So a stronger SOS typically is more rounded, and I would like to see it find support. I don't think it did that. I think we got the check, and I'm talking, of course, about AMC here. We did get a really clear check right there on 726. That was the call out level that I had from the Discord group. And that's the one that I said, you know, we want it to get above it today. I don't really care what else happened other than just holding above it. So the good news is that we are above it. And yeah, at this point, we did do the check on 726. 734 was the high from over here, so it was kind of like a buying climax. It wasn't, that's not really how you look at it in terms of the range, but it's a top, right? So anytime you have a top, you should kind of like take a mental note of where that is. And then that would be one that could also potentially be checked. So I think that whole area is pretty ripe for a pullback here. And I don't know what else we could do. We probably could figure out the angle of, it looks like it might end up intercepting these trajectory lines. So this chart, I didn't even put this on the video yesterday, but this chart actually has the trajectories that assume you're going to go up to at least 960 and then make a camp up there. This chart does not have the same setup as I showed here, which is a lower 8 to 850 range. And there's a reason for that, but I don't want to get like into like comparing why I would do two completely different charts. The main thing is that I want to make sure that it's clear that they're different and that they're both pretty possible. One of them has more to do with this idea of like upthrust that ends up distributing. So this one to me is a lot more distributive, like you peak above, you know, 9 or something like that. And then there's a lower distribution perhaps in an area that we really don't need to distribute in. So that to me would make more sense in a distribution. You see what I mean? Where you're just kind of like dipping in to that higher number and selling off. Whereas the other one, it's kind of the opposite, where you're basically like camping out. And either one is still possible for both accumulation and distribution. But I think it's more likely, if we're going to accumulate, probably going to get right into that pocket. So I think we would set up perhaps a little bit higher. There's other possibilities here too. I mean, there's tons of stuff that could happen. You know, we could see it continue from either one, or we could see it break down from either one. You can tell right here, I've got this angle, this really steep creek kind of moving up. I think that makes sense. You know, it looks like we just bonked our heads on it a little bit. So this might make sense for a place for us to find a breakout. If it holds above, and I think it might, because we only got 30 more minutes. If we hold above this breakout here, we could see that it pulls back tomorrow and then continues again pretty quickly. That would be the best case scenario, right? And you can see why that would be really significant, because you're basically coming up, retesting a resistance, then coming down and retesting this creek and making it support so long as it holds, right? And then continuation there on the picture of this particular range is essentially an SOS. So it works out in favor of us to kind of get that 1-2 and then push up again. From that point forward, I do think, yeah, we probably would jump over this guy. You can see there's some liquidity levels that would make sense for a push. $8 being a really clear stopping point, $8.50, those kinds of things. So this is the next most important one up here, and it's closer to 9 than $8.50. But at that point, we would just kind of wait and see how this forms, because I'm not positive about this uptrend yet. There's not much to go off of. We just got those bottoms. So being up 9% is great. It could have made it in 3 days and been like 3%, 3%, 3%. What's more important is not the percentage. It's just knowing that you're heading up above where typically that S-curve would reject. This is where the S-curve always rejects. You know what I mean? It just does. And I gave examples of that in the video, but every single S-curve you can find that rejection. So if we can get over it and hold over it, really strong chance that we're not going to head back down right now, but we might find support and then head back up. I know there's going to be bears out there that say, well, I still think it's going to come down. It's, you know, it's hitting a top. We could still see it slide down and be a widening that continues. That's not completely incorrect. I mean, it's possible. It's definitely a possibility. It's a bit different than some of the other widenings that we've seen. There's a lot of time with a widening, you get like a ascending motion. This one's more like a descending motion for a bear case. So what I mean by that is, like, if you flip the chart upside down, you can see it looks more like a triple top rejection with some weakness, like a sign of weakness here. This would be like a UT, right? And then all that's left is an LPSY here, and then it just starts dropping. This doesn't look great for a bear right this second. So although I do understand, like, this is why this was so critical, right? You can see it, really see it upside down really clearly. Like, if this stayed above, it would have been like, oh, it's an SOS with a backup, and then it could continue. But instead, it looks more like a UT that's sliding down and making new lows. And then typically, as long as this holds, that's the big thing, right? Then it's a hook, and then you see it start melting backwards. And that would be in the favor of the bulls, right? That's what I'm talking about upside down right now, but I like to look at it both ways, and then you can kind of tell that way, like, oh, okay. So the bear case here was that it would hold here, it would reject along this line, and this would end up becoming quote-unquote support for the bears, and then you would see that push up. But instead, it just drove down through it. So just being fair, like, if we saw this on a top for AMC, I would be very bearish right now. So the fact that we're seeing that as a bottom makes me feeling pretty bullish right now. If you saw that kind of volume on a sell-off like this heading down, I think you'd feel a little bit, you'd be feeling it. You know what I mean? If you were a bull, you'd be like, oh man, here we go again. You know, same old, same old. So yeah, it's a bit of a bizarre one though. Like, I was thinking about the pattern, and it's really tight. It's almost like exactly like a triple top if you look at it upside down. And so this would be like a descending broadening with a 90-degree top, which is a very strange pattern. Believe it or not, if you guys go to like Bulkowski's site, he has these patterns on there. And I was just looking at one earlier today. That's why it's like fresh in my mind. And it's about SPY, because SPY has the opposite. It's got like a ascending widening with the 90-degree bottom. So it's like flat on the bottom, and then it's making higher highs. This one on SPY typically performs better, supposedly, when there's a volume decrease. And I went to look at previous one, because we just had something like this on SPY. We had one that was, let me see if I can find it. I want to say maybe 1 hour will make it easier to see. You guys are like, your chart's a super hot mess, Booksy. Yeah, I know. It was like over here. Yeah, it was this guy right here. So this was one in which it broke to the upside, and you can see the difference. So in this one, I know there's like this really low thing, and it's like, oh, well, now it's less of that, more of this kind of deal. With extended hours on, it just looks like that's a channel. With regular trading hours, you don't see that dip. And so it presents itself kind of like the same way that we're seeing right now, as like this ascending widening. So the spread is getting wider and wider and wider, and it's got that ascending top, but the bottom is pretty flat. Notice what happened on this one is that you had this like gap up right after. I mean, it broke out pretty intensely. It didn't come back down. There wasn't like any major retest. And I still to this day was like kind of thinking that it would come back down. You know what I mean? Because it just didn't seem like that made sense to me, I guess, at the time. And we're seeing something kind of similar now, and it's happening on the S&P, and I know my chart's like really messy today. I'm looking at possible put entry because much like the other one, this has like a 1, 2, 3 touch on bottom. It has a 1, 2, 3 touch on top. And that tells me that there's no definitive direction just yet. And the reason that that would be significant should be pretty obvious. You can see on the 1 hour that we've had nothing but pretty strong RSI divergence coming down ever since, November. And when you look at the big picture here and you go out to like the daily, I would say the weekly is pretty strong as too, but the daily also is finally getting overbought, and it just crossed down. So it's not that this is impossible, that this continues, but right now what it looks like is that the uptrend is for the most part finishing. Now that doesn't mean it's done. Again, necessarily, because this could be just a really short correction that still turns back to the upside. So because there's no confirmation, unlike this previous widening, this one did not confirm, and it has 3 hits on both sides, which is a really strong pattern. So I'm watching kind of like big picture, and when you get up to like the weekly, this is where things start looking a little bit more grim, perhaps. It seems to me on the weekly that it's a bit overbought, like it's pretty far away from, its moving average. And that typically doesn't happen very often. And then also these two tops are divergent. So if this were to turn around now on the S&P, and it's an if still, it's an if statement. But if this were to turn around still on the S&P, I guess what I'm saying is if it turns down, that divergent top would add layers to that. And the 50% on that one is not unusual. It's over here around 435, I believe. So it's a previous level of support. And you can see, we don't really have a strong creek check here back down there near 435. So coming back down would not be unusual. The other option, of course, is upside, and that's always a given. The reason I'm talking about SPY today is I'm looking at it, and I'm trying to think about what I would want to do in the trade, and I've got some setup for a possible put position, and I'm not trying to, I don't know what you call it, catch a falling knife in reverse or something, but I'm still keeping my eye on AMC's price. But I do think that it's got this really clean setup right now for a possible reversal. So if it were to reverse, 450.55 is one of the big breakdown targets that I'd be looking at for this widening. So I did the widening breakdown target. The widening breakout target is a pretty high target, so it would go much higher, significantly higher. I think it'd be up here near 468, something like that. I think it's like a 70%. I don't know. I have to look at it, but it'd be pretty far up. So it would end up being, maybe near 465. But it's not a very far target, so it's not like super duper drop here. On the day, though, this is a bit of a mixed candle. There's a daily candle right now where it looks like we're kind of just finishing in between open and close, if I don't recall correctly. I will soon be corrected. Yeah, so there's a pretty steep wick to the upside here, and then a wick to the downside on the daily. None of this is particularly direction indicating, like, because technically this kind of a indecision candle could kind of go either way. I'd say, you know, if this were to continue to push up a little bit more, I believe someone in our Discord was talking about that as well. If this were to push up a little more, I would agree. Right now, though, it's still sitting underneath this kind of 50% on the structure. So again, I'm just kind of reading the leaves and saying, like, well, it's already overbought. It hit kind of like peak buying here. Had a pretty steep reaction. If it's going to continue, it could build support and continue back up. This could be just a pullback before continuation. But, right, it just depends on what happens here, because the other thing that I noted was that that widening was going into what appears to me to be a breakdown. So it could be a possible bear trap here, where they're trying to see if bears like jump in. And that's definitely a possibility, you know, that you see like a bigger turn here. We didn't ever get oversold or anything on the 1 hour. But I drew a channel using the top 3 touches here, and we're right on the edge of that. And I think that's kind of like the main outer point of the channel. Like, that's the outermost place I would draw a channel on this uptrend. So right now it's kind of broken out to the side, which means it's technically outside of it. And if it closes outside of it, again, it's either like a trap or it's bearish. You know what I mean? It's kind of no other option. And I know that's kind of not not really an answer, but it is what it is. So some people were talking about, again, like someone was saying, like, well, PCE comes out in the morning and other things like that. Like, I'm not going to try to predict every little thing that happens in the market. I'm on the 6 minute right here. You can see we're kind of gravitating right underneath it, just kind of sitting between here. I think it just created a range. I don't think it's that interesting just yet. It crossed what I think was a pretty important creek right here, but we're still kind of waiting, and nothing definitive has happened just yet. Normally, if I saw something like this and it held that 50% retracement, and it did, and then came up and held above it, I'd still feel pretty bullish about that as a possible continuation. Like, you might see another push up. But again, like, even if this pushes up one more time and it goes all the way to like 457.70, it's not definitively out, you know. And so I'm kind of not sure about SPY right now. I did every single major ticker, the top five on SPY, and I unfortunately, like, a couple of them look good and a couple look bad. So it really is a mixed bag right now. Like, I think Google looked more poised to come down. Apple, I think, as well. But then you look at other ones. I don't remember them all exactly, but I went through them, and some of them were like, meh. You know, they just look like they're in a bear or a bull flag or something. They're ready to keep going. So it was a really mixed bag. Yeah, this to me looks like you might get one more extension down, and then we'll see. So up, I mean. So that might go up to like 457 area, and then we'll see what happens. Same deal, though. It's like it's got this flat bottom, basically, and then it's widening. Weirdly, though, the volume is like increasing, so that makes me feel a little bit more bearish because it's coming into like a top area. So it needs to make the right moves to continue. I guess that's all I'm saying. I'm just waiting for it because I think if we get a turnaround here, it's going to be a pretty decent put play. Not that I'm like into shorting the market. I just like to see the setup. The big thing that I would watch for, if you're going to watch for it with me, is that this would need to come back below, and I've got it upside down right now, but it would need to come back below like 454, and it's basically got to sort of build a camp right here around 450 to 420, and then the breakout doesn't really happen till way up here around 452 in reverse. Of course, I'm talking about upside down land. So if you were going to watch for that and say like try to trade a put, that's kind of your main confirmations. They're pretty far off. And then if you're confirming to the upside, frankly, like, it just needs to come back above like 458, and then it needs to come build a top again and then continue. You can't, like, you can trade this on the principle that the market you think is just not done and that it's got to run. And that's fine. I think you can't divorce fundamentals from the market at all. But right now it's just kind of creating these what looks like up thrusts. They could be patterns of a continuation, except that this one came lower. So then it creates this widening. So you just kind of have to respect the pattern, and there's not really any confirmation yet. It's sort of boring because we're right in the middle. This is typically where you see institutions move. They like to move from like the middle of a pattern. So yeah, AMC, this is upside down land on AMC. So far, so good. So far, targets have been met. We hit the 726. We found some support over it. We're above that creek. Just needs to hold above it into close, and then tomorrow, if it comes back to retest, we don't want it to drop low. I mean, it could come down pretty far if it takes half the day, you know. We could end up with some kind of a low of like 723, but you don't want to break beneath that trend again. Just, it's not good. That would be bad. So really bad, I think, potentially. But I think coming up or coming back down, doing one more check, and then getting a bigger push is probably what we want to see. And then I think we would probably break whatever uptrend we have after the next push. I think it's pretty likely. And so I do think we'll probably get up to the 8s. If we can find support, we should get there pretty easily. The other one I was looking at was ChargePoint, and also kind of doing well on this one too, because it did make the move. Like, I bought in, I got in some contracts here, I got some more here, and then it's made the move. I mean, the S curve up above, it broke out, ran to the top. It pushed over the top here. The one thing I don't like is that it pushed over the top and then it came crashing down through it. I do think that there's a possibility this is a bit of a head and shoulder, and you're going to see it drive down until earnings, which is on Wednesday, I believe. I think this is inaccurate. I don't know why they haven't changed it, but I believe it's on the 6th. So I'm not sure if it's pre-market or after hours. I really have no idea. I know it's on the 6th though. So the way this is set up, I could totally see this coming back down and retesting this pretty low, maybe around $1.93 up to even $2, and it's kind of a big area. But I could see that happening going into earnings. If it continues to like rocket, then the sky's the limit, really. There's a huge gap up above, humongous, that goes all the way up to $3. So much like AMC, it kind of made the move it needed to make, and now if it's going to come back down, if that happens, it needs to just find support basically above $1.92. Weirdly, I think it's super weird. Weirdly, like, that's the same number that like AMC took off from. I'm not like a conspiracy person. I'm really not. I like to just kind of understand all the sides of things and just kind of take it for what it is, you know, as it makes sense. But it is really weird to me that this is hitting like all-time lows, and it's not a stock that I feel like is going to go bankrupt, but that it set up its support at 192 is really strange to me. And I just think that's really odd. You know what I mean? So anyways, I don't know. We'll see. I mean, technically it took off from like 182, but what, you know, I can't help but feel like that's bizarre to me. Like, why is that even a special number? That makes no sense. Maybe it's not special. That's the answer. So yeah, normally if we close above the 15 on the 180 or the 180 on the 15 minute, usually you see continuation. I mean, most of the time you can kind of go back through. It's not always. Like, sometimes you can tell like this was like an up thrust and it broke down after. But most of the examples that we have where it closes above it, and then you do see some continuation above it. So really looking for that. I know that ChargePoint's in like a macro downtrend. I'm well aware of that, but it's also not. Like, it's broken out of the main downtrend it was in. that it's been in for quite a while. And that's the reason why I started watching it, because I watched this move here and then it dropped and I watched it do it again. And I was like, oh, it's gonna find that bottom, I think. And you can see the volume, that volume pickup right here after that drop. I'm never 100% on anything ever. I don't think it's wise to be, but I'm pretty confident about this one showing some teeth. I really do think it will. So I'm of the opinion that it's going to be a move back up to near 460s first. There's a big intersection of like trajectories and important levels. It's kind of the midway point between these two major levels that we had. So I think if it gets that breakout, you're going to see like a big move up to like 320, and then it finds support and pushes again at 460. So I actually had gotten long-term stuff. I bought stuff for way out, $5, whatever, you know, for April or something, because I looked at it long-term like that and said, yeah, I think that could happen. I think this could be kind of similar to an AMC type situation though, where you could see this kind of move up high and then come across like this major creek. And there's this really huge one. And now this is probably I'm going to say about ChargePoint, and I'll go back to AMC and watch the close. It's at 749, so it's looking good. But you can see like what I mean. Like this has a pretty decent chance of coming back up to like that 450 area if it breaks out now. And you can see why. Like there's this really major narrowing that's going on. So if it can break out there and then push above, I think there's a likelihood based on where I'm seeing like the creeks. So there's one historically like way back from November and then September of 2022. November of 2021, September 2022. Those ones would be like the next up. And so I think you'd get a pullback potentially to come back down to that liquidity again. And you can see the humongous amount of volume in this area. So I do think it's significant. I don't think it's just selling off forever. So I do see this as a potential M cross. I don't know if it's ever going to come back this low again, but it could. And then probably from that point, I really do think that, again, around maybe even by April, you might be up to $10 again. I think it's very likely, because that's really where the next shelf is around 9. So it's a pretty huge area. Whether or not it continues, I don't know. You know, this could do a number of things. It could redistribute and come back down into the 4s. There's a ton of time here you can see on these trends. So they've created this really nice, I call it like a labyrinth of parallels, you know, where this could like walk across them for quite a while. So I'm not like of the opinion that it's just going to run forever, but I do think that 10 is likely. So that's why I got long-term options. Historically, I'm on the 4-hour, but it's on basically, it's the most oversold it's been. And it's on a divergence right now. So if it holds, it's really strong. It looks to me like AMC wants to keep it, which is good. We got like 10 more minutes. You never know. So someone might try to short it down last minute. Gonna just kind of watch it as it goes. I think ideally you want to see it kind of hold high here, and then tomorrow have that pullback. Could even be like a gap down or something. And basically you want it to check either 734 or roughly 724. 724 to 734 is fine. Either one would work. I say that ideally because you really don't want to leave. Oh, I don't know what I'm doing. I hate when it does that. You really don't want to leave without that test. Anytime we've historically left a test like this and just not check something, we come back later. And so a good SOS here would be coming back down and bouncing off the top. Because we checked 724 today, unless it's going to be like a bigger range, I'm kind of leaning towards 734, but I guess we'll find out. And you guys are like, yeah, you don't know, Booksy. You're right. I don't know. There's always a chance that this was from earlier. So there's always a chance that you have a larger range, you know, from basically where we are between 726 and 750. You could always have a range here before you go up, and that could take a couple days. So it's never like exact, you know. Especially with parabolic stuff like this, I'm always just really cautious of the move. So here's what I think though about this parabola. I think you can see it's narrowing. So I noticed earlier when I drew this, you see how I drew it? I don't know if you guys can see it very, very clearly. I drew it as an up channel, but it started becoming obvious to me that it wasn't quite right here, because when it starts going up, it doesn't even come back to 50% anymore. So what this looks like is one of those like beak things that I draw, because you can see that the first, and I know you guys are like, well, why would you identify it like that? Maybe you should explain that better. I should. So basically like the first move right here and then the second move right here kind of tell me that it might be narrowing, because you can see the spread has reduced. But then look at every move subsequent, like they're continuing to narrow. So that to me indicates that it's not so much a wedge, because we know that a wedge in this case would have already been broken out of like a long time ago. And the bottoms look like more like straightforward. So I usually at this point I'm kind of like looking at the general pattern. It looks obviously like a parabola, and it left, you can see with the narrowing, it kind of left that mold behind. It still respects, which makes sense, it still respects the nature of the trend. You can see here there's some hits on it late in the day. But what I normally would do at this point is then I would just kind of draw the main shape. I've learned that if you try to draw the outside first, you typically can get it really wrong, meaning I've gotten it really wrong in the past. What's better, in my opinion, is to draw the inside-most shape first, because that gives you a kind of an idea of where it is, where it might be going. So you can see here, like it looks like it's pretty much gone straight up vertical at this point. And then I would go back and look at the outside shapes, and this gives me a better way of drawing it symmetrically. So as opposed to just kind of eyeballing some outside shape. In this case, they made it really easy because I already know where the top is. So it's kind of easy. But then what I'd do is I'd look at these guys, the little midpoints on the curve, and I kind of adjust that. And then the bottom, because it's hard to draw a curve if you only have like 1 or 2 points. You don't really know where the bottom is, you know, indefinitely. It just sort of, you're just kind of guessing. So again, I usually try to draw the middle first now. So I think it's easier. So I think this is a pretty tight one. I don't feel like there's no probable reason to assume that it doesn't have, and I might even ignore that outer one, but I don't think there's enough cause here to think that there's going to continue further. And that's because we drew the middle one first. The only way this continues further in terms of like a beak is if it abandoned the middle somewhere in the day and we just kind of get it wrong and we find out later that, oh, well, it abandoned the middle and it was really coming back to the middle. But I think it's easy enough to just say, yeah, it's probably done. So what you can do is it's just like, it's exactly like a rising, and it's a really cool little way to do this. So you basically can take like the widest point and you can say, well, this is essentially like the range in which you might expect. Now, is this problematic that the range might go down to like 715? Yeah, I think so. But it doesn't really matter if we did drop below, as long as we come back above. I know it sounds weird, but because I've been talking and stressing about how you don't want to drop back below. I'm not saying it would be ideal. Like, you don't want to see that usually, especially if it's like a really nasty slide down. But typically, like, I don't worry too much about it, because as long as it closes back above. So tomorrow, if this were to drop down low, it doesn't mean it's completely done. You can see there's what looks to me like a shelf right here at 715. So it could be that that's what we're going to see targeted here if this doesn't go any higher. The other thing that could happen is this could still extend up. Like, we get some kind of crazy candle last minute that goes up to 765 or something. And then I have to just like bring it up, right? For right now, I think that this is terminating here, meaning that's the top of the beak. So I would take that widest point, and this is probably where the range setup is going to be. So yeah, I don't think it's a big deal though. If it comes back down and drops below here, that's okay as long as it comes back up. The only thing you don't want is that hook. And a hook is where you drop below resistance. It's essentially just finding support, but in reverse, right? And then you end up hooking, and then you end up with this nasty like drop. You don't want that. All right, so it doesn't make a huge difference to me. The stronger a breakout is, the less likely you are to lose any kind of support levels. So this would be kind of perceived as a weakness, but as long as it came back up and ultimately found some support, you should be fine, even if this drops down pretty low tomorrow. And that's assuming that that happens that way, but I could be wrong about the beak. All I know is that a beak typically lays you up. It's like a layup. It's kind of like throwing a basketball up and then it drops back down. And usually the distance that it drops is about the same as the original channel you might have drawn. And this has been fairly consistent, I've found. It's usually a pretty good indicator of where it might be. So we're at 2:55. We got 5 more minutes. 5 more minutes. SPY 460 close option chain max pain. Yeah, 460 is up above. So that would be like the more bullish outlook here. Like I said, I think the fact that this came down midday and hit like the 50% retracement, that's bullish. But in order to really see like stronger continuation here, ultimately, I know it seems a little bit like ridiculous to say it, but it needs to basically come back up into this channel. So we really want to see it above 458, and then ultimately, yeah, I think you could end the week even over here at 460, but that doesn't mean it's necessarily bullish. Distributive actions still come up to the top, so you'd have to watch it. Is this bearish? Is this bullish? Right now, it's going to look to a lot of people to still be bullish. I think there's an expectation that there's going to be bullish news tomorrow. You know, on this pullback, it made a higher low, and then it did it again. And it's making higher highs now on this pullback. But it is a pullback, and so you have to kind of take it with a grain of salt, like you would anything. You know, did it jump this in order to come back down? You know, is this like a little SOS, a sign of strength, and then it's going to come back in a backup, hit the creek, and then continue back up? I think we'll find out pretty soon. I'm just not ready to phone it in yet. I think there's a great assumption that the market is definitely going to keep running. I believe, if I'm not wrong, one of the big ones, like Goldman Sachs or somebody, said that the recession is over or something like that. But the thing is like, if the recession is over and the Fed starts cutting interest rates, the same talking heads were saying for like a year that the moment that the Fed pivots, the market's going to have its final drop. You know what I mean? Like the talking heads, as they are called, which are these people that always come and comment on this movement of the market, were saying for a long time that they felt like as soon as interest rates start getting cut, the market's going to see this massive nosedive of correction before it continues on. So can you have it both ways? You know, if on the one hand you're saying like the recession's over, the market's going to continue upward, okay, you know, that's fine. But if the recession's over and you're expecting the Fed to cut interest rates, then what were people saying about that a year ago? Like, that's how I feel about it. I'm kind of like, all right, like, well, this is kind of backwards. It's almost like everybody wants you to think it's going to just run to all-time highs, which it could. You don't hear me wrong. I'm not saying anything definitively here, not because I'm trying to like cover my bases, but because I legitimately don't know. I think that where it's at right now could go either way, you know. So this could be just a pullback, and then it's going to continue on, or you could see it come up and then redistribute, and it's going to drop. And if it breaks down again, it's going to come pretty low, you know. And it could just be a part of a much larger pullback that then continues upward again. You know, there's plenty of support built down here around the 447s. So I don't know. People always expect everything to just go straight up, but it could easily have the bigger correction and then still come up. And it could do that all within a month. you know, a lot of the next quarter earnings are going to be mid to late January. So they're going to be about the January 20th area. That's where a lot of the big top dogs have their next report. So I feel like there's a number of things that could happen between now and then that would satisfy a lot of people. But it's not always necessarily exactly what you think, you know. So tomorrow we might have bullish news that sends us back up to 460, and we might end the week kind of chilling out up there. But at that point, you know, you're looking at what next, you know, because again, like there's no guarantee with that kind of a top that that's not a distribution. It could just be an opportunity for people to sell again back into what they perceive as weak hands, the market on the whole. Cuts won't happen until July. All right. I mean, I guess I could just take your word for it, but I've not heard that. You know, maybe the Fed has said something about it at different points, but they've also changed their mind about stuff pretty frequently. You know, at one point they were talking about, you know, freezing stuff, and then they didn't freeze it, and then they did freeze it, and then, you know, it's like, as much as I want to just take their word for it, I don't necessarily believe them. So that it's going to be exactly whatever they say all the time. I recall them saying it was going to be like mid 2024 because of the disinflation was not happening in retail, or not retail, in real estate, that they were expecting it to be mid 2024 before that correction, I guess, happened. But I haven't really been following as much since then, so I could be wrong. That was like a couple months ago. Like I said, that's that. Well, it's highest percent from market. I don't understand that comment. Can you hit retrace targets in after hours price action? Sure. I mean, but usually like the whole point of a retrace is that you're checking supply. In the event of a gap, there's only a couple different ways to read it. One is that you're enticing somebody to buy. The other is that there's somebody that's covering or needs to buy back puts or yada, yada, yada. I mean, there's all kinds of reasons why you might see a move after hours, but usually I think about it in terms of like just simply supply and demand. So if you open low, it's probably, not always, it's probably because you're trying to get back to what? A demand level. And sometimes that's obviously not good for us because we might see a gap down and the demand level might be ridiculously low. So you end up, you know, thinking it's going to be some kind of a turnaround, and it's not. So I don't believe there's any kind of one size fits all. But sometimes, like in this case, you can see there was a supply and it gapped up, and then you ran up for supply, and we ended up filling the gap over time, you know, and the supply wasn't that far off. But it did start distributing a distribution really quickly after the gap. So if we were to gap tomorrow, it would really just depend on direction. If you gap down, I think the primary goal, we would want to see it being a gap down in order to get to those checks. I don't think that unless you have an absurd amount of volume in the extended hours, I don't think I would count it as any kind of a real check. Same goes to a check on resistance. But that doesn't mean that it doesn't happen. Like, we had that absurdly high volume back here on earnings, and it did go up and check 1050, which was a resistance, and it didn't let anybody else check it except for people that were trading in extended hours. So it did this shoulder right in after hours market action. So to be fair, yeah, it could do that. Like, you could see it come down with an extreme amount of volume and check 725, and then an extreme amount of volume, it reverses, and you get this gap up in the morning, and really you just missed out. You know what I mean? Just like here, it was happened in reverse. Remember, this went up. And yeah, but I mean, this was also an earnings day, so it's tough to kind of judge. It actually did like a cat ear after hours. So it did all kinds of like crazy stuff after hours, and it did the checks, and then it dropped. It was really annoying for me because I was like waiting for 1050 to hit and it didn't hit. But yeah, so I mean, if this can happen to the downside, sure, it can happen to the upside. I'm just saying, like, normally day-to-day price action, I have to agree with a lot of others that you really are talking about liquidity, and so it doesn't make sense to do any kind of real liquidity checks most of the time in extended hours. I always think of it more as like it's some kind of a tool that's being used to get to some intended target, right? And right now, because we closed high, we closed at 750, which is great. I'm thinking that we're in pretty good shape here for a pullback. I'm not super concerned if it goes a little bit low. I think that would be ideal right now. I'd like to see it go ahead and retest 724. What happens if it goes the other way? I don't know. You know, if we gap to the upside, then I'm looking at $8. You know, I'm looking at the area right above 8. And I'm considering, is it distributing? Is it not distributing? It's kind of high up, but like if we were to gap up for some reason, like 785, I'd probably be looking at that. There's a couple ledges right here. One's at 811, the other's at 790. And those are two areas where I think you could see some upthrust, some possible distribution. And yeah, I think that would be a bit annoying because then you run the risk of, crap, well, are we going to then drop back down and have this massive retracement? I mean, it could happen. It could be like a giant M-shape wave here. That's sort of just an inverse, you know. I think the 50-50, I haven't really looked carefully, but I want to say it's pretty close to that 805. So if we were to see like a gap up to 8, I'd be a bit concerned we'd get like a 50% retrace, and I'd probably just exit calls, to be honest, just from the principle of it, because I can't trust that kind of a move would continue. Even if it did, I would at least, you know, have stop losses and junk just to save profit, because you'd probably make good money on that. But if something like that were to happen, I would be a little bit more inclined to think that it comes back. I would be more inclined to think it comes back down. And it does kind of a quick sine wave rotation here and hits 724 after the fact or whatever. And that could be a way to delay things, you know. Typically, AMC likes to kind of take its time, and once it breaks out, it goes, but it takes a long time to get to that. So sometimes you get these LPSs pretty frequently. So next LPS I'd like to see is around 724 to 734. Whether we go high or we don't, that's kind of the same thing. And then breakout targets, I've got some pretty strong ones that look like they'd be up here around 960, but then, you know, the lower ones are kind of obvious, 8 and 850. Think about your 50-cent markers. They're all the same because we did build supports there. So you can see like 8 was that original kind of center point. It would be a logical place to come to if we were to continue upward, because it'd be an easy place to either find support or find resistance. You can see why, you know, right here. It's a high liquidity shelf. It's also where we kind of touched down here when we first dropped after earnings. So if I were going to try to rotate the stock, that's probably where I'd go, like here in the sine wave. But I also think that from that point, it's a little different. You know, that's why I was saying you could see it distribute across 8, and I had the other chart drawn for that. And that one is kind of a crappy scenario. It's like my least favorite, because I could see how that could throw a lot of people off, myself included. You're like, how could you be thrown off if you already know about it? Because things change, you know, like if you're in the market and you're looking for something to be easy, you're kind of in the wrong place. Like a lot of times things look like one way and then they really drastically change near the end. And we could see this, and like as it starts to form, it could look good, and then it could really drastically change right at the last minute. And that's where it's frustrating, because I might even anticipate something like this happening, where we see this like push up and then we break down to new lows perhaps, and I could still be caught off guard by it, you know? So I think 8 is going to be a really, really, really big level for us for this possibility of continuation. And then 960 is my next big one after that. And I know you guys already know about 15. 15 seems like a pipe dream right now. It seems like it wouldn't happen. You know, I'm looking at volume and I'm like, yeah, that's a pretty significant buy-in there. You know, we just bought in a whole lot of shares right off of 705. That's an incredible amount of buying off of 705, which was the previous bottom here. So if this were to find any kind of support there and continue, it would be really strong, you know. You see that buy-in from that bottom could end up pushing us up pretty far. And there's a lot of other reasons why we might come up really high up here. But I definitely think the idea would be to get up to around 1440 to redistribute before anything else. So that's a big move. That's the kind of move that, I mean, if you get it on the ground floor, you know, it's 100%. So it might seem a little ridiculous, but you know, if you got in on the ground floor over here, this was like 53%, you know what I mean? And it ended up going a little higher. So it is what it is. Nice spider webs. Yeah. Yeah, I get made fun of a lot for that. The thing is like, I know what all these are. I don't use them all the time. I'm not particularly looking for these particular ones right here to necessarily be true. This is a trajectory right here, these intersections. It's important because there's a really clear and evident target there from way back. So we dropped off this creek. We had this trend that was going up, and at first I thought it's steeper because there is a steeper one. I still think that's a possibility, and that could be one that we end up kind of messing around with later on. When we get to like 15 or something, you might actually find out, if we get to 15, you might find out that the steeper trend here maybe is up where that is, you know. But the lowest trend, which was established back here, which is where most of the touch points are, including the place we took off from, and then when we hooked on November 10th, it's pretty significant. I think it's 960, which is a previous top from this area right before we broke out. And I looked at that and I went backwards, and it had some very evident, you know, anchors. So when I look at something like that, it's hard for me to ignore those trends. The rest of this stuff, some of this is just me doodling. This is me doodling. This particular intersection down at 490 is really significant. It's part of the reason why I think we could end up with a distribution down before anything else. Now, if we went to 490, you better believe I'm going to be looking for that turn. That's a very different situation. But that would be more like the bigger widening that could happen. But I don't know yet which comes first. So, and I'm not going to pretend like I do. I think what's most likely here is that we get to 8 or we get to 960, and then we'll see. So that's that. I like the concept of a buy-in here and then a drive back to the highs, but we're not there yet. So it changed to 749, so I guess it dropped a penny. Yeah. Oh, there is one other thing we just did, which could account for some of this, and I meant to mention this in the video, and I don't think I did, so this is pretty important. If you go back, this downtrend, the one that I've been kind of using for a lot of this theory, I guess you want to call it, of possibly going up. This downtrend, in my opinion, if you take the top from, this one in particular, if you take the top from August 11th and you go through the top on November 6th, we just jumped that. So in a lot of ways, we're kind of dancing outside the trend right now. There could be a higher one that you could draw. There's always more than one, but I think that's the strongest one that I've got. And I think if it stays, again, if it holds above it, it's like a double breakout. So you've got the break of the major downtrends from forever ago, these parallels. That's the red ones. This is just a Fibonacci channel that I drew, nothing crazy. And that channel just broke right there, right at the cross section. So if you need proof that I'm not completely insane, you can look at stuff like this when it happens, and you can be like, yeah, well, either Booksy's a really good guesser or there was a mathematical reason for that, but it was right there. So it's like a three-way intersection between the previous support, the downward massive channel that I've just happened to draw with a Fibonacci because it works out really well, and then the overall creek that we want to jump from the big parallels, which come from 2 years plus of downtrending. So that's a significant breakout right there, you know. But I do think you still want to see that back test, you know what I mean? So yeah, so bigger picture, we broke out of that, so that's a good thing. And that's also part of the reason why I think, yeah, it's kind of possible that you get down to like 490 after, especially if this comes up and then it redistributes. I could see how that easily could happen, where I don't know how long this top takes, but 490 seems really far away, but it's not really if you're on the outside of this, you know. So if it happened to move to the upside and we got to 8 or 960, it's pretty easy to see how you can get right back down. Just do like an inverted trajectory of whatever that top might be, and then you can test it out, right? So if that's like, let's say you think it's going to get to the high roughly around mid-December 18th or 15th or something like that, and it's 118 degrees, you can do a 118 degree reversal and check out, let's just see, just in general, like if it's a wave, how fast does it go? And then you can put it in reverse, and you can kind of see like where that might end up being, you know, at a low. So it's significant because this takes a longer time to get there, and it doesn't do any checks. If it does happen to break down, it's going to be a more significant breakdown, because it's going to have to travel pretty darn far to get down to the check here, right? So even if it does the check now, if we don't see it early on, I think it's very possible, you know, you get down to like 490s sometime in January perhaps. But that's like a completely different setup than if it were to go up first, you know. But this is the grind of the TA, right? Is like there's always an infinite amount of possibilities. You're just kind of looking at what's next. And I don't want that to sound like it's definitely going to be like this. I just worry about this one a lot because I think it's nefarious. It's just one that I'm like, yeah, I totally see it, dude. They do this kind of crap all the time to screw with retail, and it'd be hard to know. But, you know, the more genteel option of this one is just that you basically get continuation, and then you just end up with a nice push up high, you know, however that happens. So I will find out. If it helps, I'll just delete all this stuff, and then people can just guess. I think if we get that midway point, it'll be right here, though. I think you're going to have 8 and then an extensions up to like 880. There's a creek that formed on this tippy top with the extended hours on. I think that's going to be a significant one because you can see that up thrust resulted in that major downward move. So I think that's a really important one. So I think it'll be roughly where that intercepts here. Kind of in this squishy middle that we left behind. So, yeah. Yep. After hours moves. Yeah, I don't like them either. I find them to be really frustrating most of the time. Even good ones kind of frustrate me. And it's a very active stock. Some days it's just random, you know. It's like randomly it'll just be like super active. There's some stocks in the market that trade pretty regularly after hours or extended hours, as you'd call it. AMC is very back and forth. Sometimes it's just kind of flat. Nothing really happens. Sometimes it does this crazy wicks after hours. You know, just really bizarre stuff. And I'm not saying there's no other stock in the market that does that, but I've just noticed it more with AMC because I watch it. So it is frustrating. And I don't know, man. There's people that try to make heads or tails of that stuff. I don't personally make too much of it most of the time. I just try to like focus on what we know and go from there, because we don't know what we don't know, you know, so that's kind of a given. Right now I'm just kind of watching and want to see that pullback, so it's pretty straightforward. It's now reading a 75% chance of a rate cut by May, so it just got moved up. Yeah, so like that's what I'm saying. I don't know, as things change in the economy and the market and politics change and yada yada yada, you might see that a previous region of, hey, we're gonna get here by then or here by there, doesn't work out. So I'm not sure. You know, I think the fact that SPY came up and hit this marker today that I had drawn is significant, because it's testing the waters to see if it wants to come back up. I'm not positive it's going to. I mean, the last time we did this, we had a pretty big move up to the top. This was on November 29th. We dropped back down, found support, really interestingly, in a very similar area, because this is I believe this is the creek. Yeah, this is the big creek. So this goes from all-time highs, is that right? Through this top here at 459. So I think that's right. I don't know. I'd have to go back, like zoom out. I don't want to zoom out right now. So interestingly, it did the same thing in this move up. It had to slide down. It bounced, and it rejected here around that 50% marker. It's 50% of the pattern. It doesn't, and the way I did it, if you're wondering like, well, how do you know that? I'm not 1000% sure, but what I did is I took a simple measurement of this first double flush here. So notice that we hit a high at like 455, and then we basically did a double flush right around 455. So 455 ends up being like the center point for the anchor right there. And then there's this double flush. So then you have like a top and bottom wick. And then I just did it again. Like I just looked at every move that was made. So this one goes really low. So you can see that this one would kind of indicate that you're already below. So this one looks a little bit more regular perhaps based on the way this angle is. But there's another one, which is the next downward angle. And I think that's the one that I used, if I'm not mistaken. I used this one on the run up. And there, the intersection there is 50%. So does it matter? I don't know. Maybe it does, maybe it doesn't. Depends on which one you use, but basically if you use the upward momentum, you get a different 50% marker than the downward momentum. But regardless, we're kind of just sitting in the middle of them. So yeah, so I don't know. I think it's significant that it kind of knocked on this one, but last time it did a similar bounce and then it ended up coming back low to check the bottom. I think if it avoids that, it's probably really bullish. So I think if it can avoid doing that, so even if it pulls back tomorrow, if for some reason, even if it came down to like near this previous bottom at 454, I think if it could avoid that, it's probably going to be bullish. If it doesn't avoid it and it starts breaking down again, yeah, I think it's going to be pretty fast. That you're going to see a bigger sell-off occur, and probably going to end up coming down pretty quickly on the whole, because the market is in a place where that reversal would trigger a lot of selling, probably. At least the way I'm seeing it. That doesn't mean it's going to happen, but it's there. So, you know, on the other hand, any of those higher lows, that's going to give you a possibility of a pretty strong move back up. So we'll just kind of wait. This pattern is strange. I did a lot of research on it, looked into it today, because I was like, this is weird. It's not ascending. It's kind of flat on one side and high on the other. And it's a bizarre pattern, because it has some really strong preferences in bull markets, but in bear markets, it's can be very misleading. So it just kind of depends on market conditions. Yeah, and I know I said this too on the Discord, but it does seem to me that like SPY and AMC seem to be running a bit opposite lately. I took the SPY and I applied it atop of AMC the other day, and it was like a 10-day difference. It was like if you offset it by like 10 days, it looked like they were almost 1-to-1. But there's been some really clear times where to me it looks like, oh, AMC's coming to a bottom, and that happened on, Friday. We were pretty much at the low, and then you look over here and you look at Friday and it looks like it's at the high, and it looks like a very clear, almost like inversion. I don't think that that's necessarily going to be the case forever. I think it changes pretty frequently. And that's where people talk about like beta and stuff like that, like whether or not, a stock is running with the market or running against it. I just find it to be a bit curious, I suppose, right now. I'm just kind of paying attention to it. And I think, what was the other one we were looking at? ChargePoint's kind of like that too. Like it seemed to hit its lows, or it seemed to hit its lowest points opposite where SPY was hitting. And so again, it's kind of like, well, if you think they're going to run together, that's cool. I guess SPY could just rally and then they could jump on board. But if they were to continue to run opposite and SPY pumps, then that means that AMC and or something like ChargePoint would dump. You know what I mean? So it's one of those things of, kind of curious to see how they go. Yeah, well, that's good that you got some moves to the upside rally. You got some money. I had posted the trade as being from basically like down here up to back up again. So I had two trades this past week. One was from the low here around 664 up to the highs around 726. It came higher than I expected. I thought it might go slightly above the top. It went way above the top. So that one ended up being like a bigger trade than I would have anticipated. And then I did think it was probably going to come back down and hit a new low before moving on. I thought that was most likely, even though you can always have an LPS. I thought it's probable that it comes down and makes a spring. Now we're in SOS territory, so it's kind of like I would rather see it form that SOS cleanly and then move on, because then you're likely not coming back here for a while, and we can just start looking at levels above. But I totally get why you might want to, peace out on the trade, because this is a big move in and of itself. I was mostly accumulating in low sixes or mid sixes, I should say, for shares. Options, I'm mostly playing leaps, stuff for January / farther. I guess at this point they're not leaps, but they were when I bought them. Like it was farther back in time. They're coming up pretty fast, but yeah. ChargePoint, I'm not messing around with anything short term, because unless you're trading shares, the liquidity is not that great in the options chain yet. And I noted it on, it's a good lesson if you just don't do options very often. Just be careful when you buy options. I know this is not for everybody, but I just want to put it out there, because I've made some small errors at times where I might buy an option and think that it's going to eventually go into the money, it might even do that. But if there's no interest, if there's no open interest, if there's no volume, you're not going to be able to get out of that option. It doesn't matter how correct you were. And I did it with NU, and NU is a really good stock. It ended up rocketing. But the problem is that if nobody wants to buy those options, it has a pretty dead options chain, you're going to be in trouble. So make sure if you do trade something like ChargePoint or anything like low mid caps or whatever, low caps specifically, just look at the options chain and make sure you try to get something that you think is either going to be A, like really popular down the road, or B, already has good volume and open interest. And I usually don't even bother with stuff that doesn't have at least 100 volume, but in this case, I bought some stuff that the bid and the ask was super wide. I normally wouldn't do that, but it was so wide that like it flip flop between like being up like 15% and being down like 50% like instantly, because the bid and the ask were changing so rapidly, and there wasn't a whole lot of trading at first. Today and the last couple of days, that's changed dramatically. I've seen the volume really increase on the leaps that I bought. But when it was coming down, it was like terrible. So I bought them with the anticipation that I didn't want to accidentally stop myself out. So I had to watch them really carefully because that bid and the ask were so far apart. They were like, and there wasn't as much volume. They were jumping value like crazy. So just be careful with stuff like that, and just keep in mind like, hey, this is something that if I don't see that volume come in, it may not be a great trade. You might have to kind of play with getting out of it. And I can't tell you exactly what to do because every situation is different. But I know that for me, like, I always think of them as like higher risk. So that ChargePoint trade, I think is a great trade, but I think it's a higher risk trade because right now the option chain is not dead, but it's not like there just wasn't much there, you know, on that bottom. So you're never going to have that kind of problem with something like the S&P, but not likely. But unless you're doing something crazy. But yeah, with like ChargePoint, AMC, I don't usually see that as an issue unless it's like those silly adjusted options. Those things get messed up. I believe small caps will run the next few months with LMND and CVNA leading the IWM. You might be right. There was somebody in our Discord that said that too. Maybe it was you, but somebody in our Discord said they thought that small caps might get a run and maybe the larger caps take a little bit of a break. I don't know. Like I told you all earlier, I didn't go into the details of it. But I did chart like all the major ones, and it really is a mixed bag right now. From a technical standpoint, you know, this doesn't look great to me. You know what I mean? Like, could it be a spring? Sure. But it comes after a pretty major, you know, deviation. And I looked at like the big picture. I wasn't looking at like small time stuff, so it's kind of odd, though, to see where everything is. Like, to me, this looks like not good. You know, if I look at something like Microsoft, I'm like, oh, why is it doing that? You know, why did it sort of avoid going back to retest like this lower creek? It never did it. It never got down to 296. And then you look at where it is, it's like way up high, you know, above all-time highs, and it's just kind of chilling out. And I'm like, I don't know, you know. You could do a count on it. You could do a number of things. You look at NVIDIA. These are the top 5 or 6. NVIDIA is kind of the same way, you know. It's like chilling out really high. It's got something that looks to me like it could be getting ready to either rocket or dump because it's coming to the end of the range. It's got this mild support on a creek. You know, if it makes the higher high here, it could be an SOS, but it has to kind of find support. If it dumps here, it's definitely bearish. You know, it's that simple. It's not. It's a very critical point for the stock, in my opinion. It's ready. It looks like it's ready to come down pretty hard if it drops. So you've got Apple. Apple's kind of different too. I remember one of these looked like, yeah, it was Apple. Apple reminded me of like a flag that seems to be flagging within a flag kind of stuff. Like this is a flag, this is a flag, this is a flag. And I'm not saying it's that small of an iteration, like it's like a micro iteration, but it's definitely like, oh, you got a big flag. Oh, you got a flag on top of the flag. Maybe you're going to get another flag on top of that flag, that kind of thing. I don't know. I'm just looking at the creeks. I don't think it's checked the most recent one, which is pretty low. That check would take you back down to like the 50% here, around like 178. So I think it's a possibility it comes down before it goes back up again, you know. I think Google was one of the ones that actually was not over its all-time high. And Google's got a strange kind of rising head and shoulder target that may not be very popular with a lot of people, but if it drops beneath like 125, comes beneath this moving average on the daily, I think it's likely to come all the way back down to like 100 or 110. Because again, it's based on this idea that like you're going to come back and retest that major cross. But unlike the other stocks that I just showed you, it's not overextended. So it's still like within the major range that it has. So it's a very weird one. I feel like if any of them ran, it would make more sense for like Google to run and maybe Tesla. Tesla's the same deal. It's like it never made its all-time high. It's just kind of chilling out. It looks like it did a nice M cross here. This looks like just a standard flag. This could be a 1, 2, 3, 4, 5 type deal with the fifth wave. You know, as long as 3 is not the smallest, it's fine. So I think the fifth wave could be a little bit smaller, you know, than 3. Come up to near the highs. It's got a bizarre kind of inverted head and shoulder case to it. And I was kind of staring at this one for a while, like earlier today. I was like, man, I don't know what the heck's going on. It looks like it's about to turn. I flipped the chart upside down. It looks like it's about to turn bullish and just kind of race up back to all-time highs at like 400. And if it breaks out of this trend and it comes back above roughly like 277, I think it's a pretty decent shoe-in for that reversal because it has that widening. And technically, that would be like the fifth wave, and it would be to go back to all-time highs would be to go back to the top of the widening, which is great. So like this one looks a little bit more bullish to me, and I don't really see anything wrong with it, except that, again, if you look at the daily, it's kind of like, well, it has to find support here, and if it broke down, this whole range could be pretty nasty in the end. I don't think it's ever come back up again, so it seems really unlikely. But it looks more like a possible spring action with support. We can get it back up, but I don't see how like short term there's a possibility short term of downside is what I guess I'm saying. And then we'll see, right? If we look at the trend, you might say, well, yeah, but the trend's like broken. You know, Tesla's one that a lot of people like to trade. I don't disagree with that. I mean, it's off. But that often happens on like the, you know, that fourth wave. As long as it doesn't come below the second wave, it could be a long-term move. So you have to kind of like look at it and say, well, all right, well, where's the low target? Where's the lowest it could go? And I feel like this one's sitting right on it. Like it just made that hit. So I think it come down a little bit more, but it still looks like it's within that. So I'm kind of indifferent about Tesla. So you can see why when I look at the top 5 or 6 and then I go back to SPY, I'm kind of like, meh. I don't know. Some of them look like they're ready to dump. Like they don't look like they would need to go further. They've already they've already got all-time highs. They actually look almost distributive to me. Others look like they've still got a little ways to go. You know, what carries the market is the combination of those things, obviously. And the S&P has got 500. So it's not one or the other, but the big ones tend to carry a lot of the weight. So yeah, so it's a bit of a mess right now. I think that if it finds support here, probably going to see that rocket up to all-time highs above 480. But if not, it's not that I think it's going to come crashing down. It's that I think that it's going to come back and retest. So just like this was like a flag down, and then it breaks out, and then there's like a 50% retest of the breakout. So it comes up, and then it drops, pulls back 50% of that distance, roughly. I think you see something very similar here as a possibility. So it's not that I think that it's going to just drop indefinitely. I think it's already made that widening target. Like it's already hit the top. So at this point, it would not surprise me to see like a retrace, come back down, find some support around 440 and then move again. So I think conceptually, this sense of like it has to go up or it has to go down, I just think it's not that simple. Like I think I could easily see this be a sideways move for a bit and then, you know, drop, as opposed to just rocketing straight up to 480. Is it possible? I guess, you know, all things are kind of possible in the market. So I'm going to wait and see. Yeah, I don't know what the deal is with Nick. I don't follow him because I'm not really on that platform anymore. I don't follow him. So I know he got really popular. He started kind of, I don't want to say piggybacking off of me, but that's how everybody gets their footing. So it's a pretty normal thing, you know. It's like people take notice. He gave me a lot of credit in the beginning. He started doing his own thing, and then he gave me a lot of credit for inspiring, I guess, what he was doing. I don't think he was copying anything I was doing. That's not what I'm saying. But he took off on his own. He started doing his own thing. I don't just defaultly endorse him. Like, he and I are very different in a lot of ways when we approach AMC. And his view of AMC is still sometimes very different than mine. My target at the low is 490. But I don't necessarily think that we get there in a straight line. So he might say, we're going to 490 tomorrow or something. Like, I'm not putting words into his mouth. I'm just saying, for example, if he said, I think we're going to distribute here and go to 490 tomorrow, I would say, no, I think if we hold support over 728, then we will not. I don't think it's set in stone. But I do think that it's possible, and I've got it drawn on the chart, that we could come up and distribute somewhere between 8 and 960 and then end up back down at 490. I don't think we're going to 450, so I don't know where that number came from. But this doesn't mean that it stops here either. You know, at that point, you're in kind of no man's land. You could see it dip low to 450 and then it come back up and find support on 490, and we could both be right, you know, in a lot of ways. I personally am very confident about the 490 as a potential all-time bottom, though, for the main areas that we're in, because my understanding of the market, and specifically with AMC, has to do with these specific breakdowns that I did in the video. And if someone else doesn't do it this way, they're probably not going to agree with me, you know, because then it just seems like I pulled that number out of my butt, and I didn't do that. So, you know, for someone to say like 450 makes sense, because if you're seeing that target low, you might pick like a 50% interval. 490 seems a really weird number, right? Unless you did this, and then it's like, no, that's pretty much where it is, and it's the intersection of this really long time downtrend creek here, and it's where all these cat ears seem to be pointing towards, unfortunately, you know, over time. We see evidence that that's probable. Again, does that mean that it could go to 490 and then go lower? You know, get a bounce and it goes down to 450? Sure, because after 490, if it came back down, well, that trend is now lower. So I cannot endorse his work because I don't know what he's doing. So I will not endorse his work, because he could be off the rails. He could be doing something absolutely amazing and be absolutely correct, but I don't know. So does that make sense? Like, same thing applies to a lot of the other traders that are on like YouTube and or the social media sites. Like, I just don't follow them anymore. Some of them I used to follow, but I just don't really follow them anymore. Like, I know it sounds a little arrogant, like why would you not like see what other people are doing? But the main reason is because like I just found it to be distracting. Like, I would just second guess myself all the time and not trust what I thought was correct. And even if I'm wrong, at least I can own it, you know? Like, oh, I made the mistake. If I'm wrong and I don't trade well, it's my mistake. It's not, I should have trusted myself and I traded wrong because of so-and-so said this and it made me doubt myself and blah, 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 blah. That's not the way I want to trade. So I decided that, you know, this past year, really, the whole year, I've been kind of disconnected because I wanted to just frankly like be confident in my own work. It really doesn't have anything to do with whether someone else's work is good or not, because some people make excellent trades, they have amazing strategies, they make a lot of money, but it's about me like needing to do it myself. So yeah, so I don't see it as like, I'm not trying to be arrogant or say you shouldn't like consider other people's opinions, which is part of what we do in the other Discord group is we consider our opinions, right? Consider other people's opinions, but yeah. My first Discord group got kind of bad because of that. You know, it was like everybody's opinions were all equally valid and it didn't matter if you provided any evidence at all. And I don't 100% disagree. Like, I think people can have opinions that are not well informed. It's still a valid opinion. But all the same, it was like competing with phantoms, you know? It'd be like, I'd be talking to somebody and they'd be like, well, so-and-so thinks this. And you're like, okay, like, I don't know what to make of that because I don't know who that is or what they do. And it's difficult, you know? So I don't know. That was a really long-winded way of just saying that I don't know. 450 sounds about right. I don't think it necessarily gets there tomorrow. And I also think that, again, there's a strong chance that we come up here first, or that right after we rock it. So I don't think that it's, again, like one-sided coin. I think there's a decent possibility and probability that it happens a little out of order from what people might be expecting. So I'm just kind of watching it. You know, and I think that for the most part, I've been doing a pretty good job reading these ranges, you know. I think we saw a lot of this breakout. There was a sort of a scare that happened back here in October that I got really concerned about a possible breakdown, but it did exactly what it needed to do. And I gave the targets for that, and it ended up doing it. It did exactly what it needed to do to go bullish. It was really great. So we got to see this bullish run. You know, I called out 1080 originally, and then later I said, when it got closer, I said maybe 1115, and it ended up hitting 1115. It overextended, and so a lot of people started not believing that it could come back down, and I said, well, that's silly. I think it will come back to 9, and then it came back to 9, and then I said, you know, we're going to look for that breakout again. And you kind of just watching it do the same thing over and over again, and it did. It did the similar kind of move, but then things got weird here, and this is where I was probably the most uncertain in November for good reason, going into earnings, and yeah, and I called out downside pretty early, you know, pretty early. I said there was a probability here that we could come down to 6, and I got laughed out of the room again and by some people, and I don't know why, but they apparently didn't think that was possible. And I said, yeah, I just think it's a possibility. I wasn't sure it was going to happen, and I didn't really think it was necessarily the way we were going to go until really that Monday into Wednesday. That price action looked pretty gnarly. It looked like a head and shoulder setup. So I didn't actually play puts very far. I played them down into earnings, and that was it. I didn't play the rest of it. I know that sounds dumb because you were like, well, wait a minute. If you said 6, because I wasn't prepared to like make that kind of a risk, like take that kind of a risk into earnings. I just felt like it wasn't wise for me to do that because I just didn't know. Felt like it wasn't a good idea to take that risk. Had I taken that risk, probably would have taken home the bank, but I didn't do that. So from there, I think I got it wrong here. I think I can confidently say that I was hoping this bottom was going to flush out and we'd get the bounce early. That didn't happen. So I know I was wrong here. Instead, we got that continuation. So if I were to say I was really wrong, I would say I was really wrong right here, around 820. That to me, it was probably the biggest flop on my part because I thought it was going to continue and it just did not ever make that move back up to that $9 area. From there, I've just been kind of watching it. I knew it was going to do this kind of slumping thing that it likes to do, where we see it kind of peel down through support, and it did that. Then you just have to wait because there's nothing you can do. You just have to wait for the range to form, which is why like I thought this was going to do that typical M cross thing and then come back down, and that's been pretty accurate. Finding targets is easy when you kind of anticipate the general motion, but the problem is that if you anticipate the general motion wrong, then you're going to get wrong targets, and then you're going to be disappointed. So you have to be really careful when the way you're anticipating things to make sure it doesn't blind you from what's possible, because that's always where people, and myself included, go wrong, you know. And we had a guy on our group who was just really really adamant that this was going to come up to 9 immediately, and I was really nervous, and I kept telling him, like, don't tell people that they're going to miss out. You're not doing that kind of FOMO thing isn't good. He stopped, to his credit, he stopped doing that. He stopped kind of trying to pump it up, but then it ended up going south, you know, and there wasn't a recovery. He just kind of dropped and it took forever. And hopefully he rolled his options out, but he wouldn't have been in good shape if he didn't, you know. And I felt like I didn't invest, even though I was saying I thought it'd come up to 9, because it didn't confirm. So that's why. He thinks 450 by Friday. No. Not unless it breaks back down beneath 720 something right here. I mean, you could come pretty low tomorrow. Come down to like 715 maybe. I would see that as a possibility down right around here, but it's too early to say something like that because all we've seen thus far is a breakout. Like, it made a spring action, it pumped up to the top, which is an SOS motion, and then we just closed above some pretty major creeks. So in order for this to break down, you could take what I have right here and draw it up here, and that's kind of accurate. Like, if we drop down beneath here and it hooked, and then it started bleeding out, like that to me could get you down there, maybe by Friday, but I don't think so otherwise. And you know me, like I've said that before and I've eaten my words on it. So we'll see. I'm just watching that level. I think the 726 is the big battleground right now for me. I think if it holds above it, I do not see a possibility of us going down to. I'm just being as straightforward as I can. I do not see a possibility of us going down to 490. It's that simple. Because if it holds above it, I do not think this is distributive. You know what I mean? If we drop below it and we run more of a risk of it being a possible UT with a UTAD coming, which would be like an upthrust and then upthrust after distribution. So that kind of a motion like this, for example, would be bad. You know what I mean? But that hasn't happened yet. All that we've seen today is that it got over that big creek that we were worried about, that historically, that is where the S-curve has happened. It's happened right there. We knocked on the door early in the day. We actually hit that marker like to the penny and then rejected, found support, and then we pushed over it. So I did a video about it. If you didn't check it out for the weekly, I think it's really important to understand the S-curve stuff because a lot of people don't know why, and I've been tricked by them before. But a lot of times that folks don't know why one would break and the other one wouldn't. They look basically the same. And it has to do with this cross trend, right? And where that S-curve formed. So right now, unless this is distributive and it changes to a UT So if it gapped down tomorrow to like 690 or something ridiculous and it didn't find support above 682 and then it ends up coming back up, sure, it could be a redistribution and then a drop back down. But for now, no. Like, it just made a move that kind of was a very clear bull statement, at least for me. Coming up above there and closing high is a big deal. So it says it was just crazy. He called it on earnings as well as we're running and went down to 350, and he was calling for that for a while. It was insane. Oh, well, I don't know where he got 350 from. He might have got it from me. I had been calling for 350 for a while, for a long time, to the point where I was kind of getting made fun of at some point by people on like, this was like early in the year, mind you. And we did end up coming down really low, which technically would have been sub 350 because at the time 350 was way up high in those previous ranges. We definitely came below where it was in a price comparison sense. We're way below that now, but yeah. I don't know, man. I don't make call outs for no reason. So it's not that they have to happen. They do not. But if I see a really strong target, like that 350 and that 255 target that I used to have, I guess I won't forget those ever. I just think they're really strong. Like they were really strong targets. There just seemed to be a very clear desire that bears had to get to those points. And I think they got there, obviously. They're not the same as they were then, but I think they got there. They brought the stock down. That doesn't mean, though, that they're all right. I mean, like, there was that $21 target. That's still, in my mind, like a super important target. Like, it's 210, or it's actually dropped a little bit because there was a shift, right, in the chart here. That pre-split thing, the 1715 thing, that shifted everything down. And it's more like 180 something now. And I still think that's really important, but it seems really far off, right? Like, how the heck? We're not going to get there, you know, anytime soon. Because it just keeps taking other avenues, you know. So sometimes I think the targets are there because it's the path that the bulls might take versus the path that the bears might take. And it really just depends on who wins. And if the bulls win, then they get their target. And if the bears win, they get their target. And sometimes it takes a while for that decision to be made. And that's that. Like, so just because I have a target down here at 490, I don't think it necessarily hits, but I think it's a strong one. But I also think that the target up here is also super strong. Like, I made a point in one of the earlier videos to say that this is a middle range. Like, we're kind of sitting in between two major creeks. The 490 is only like a partial target, but there's another major creek way down low in the 350 area. And the one thing that bothers me right now is I don't think we came up high enough because we never tested this guy. Yeah, we tested the bottom here of 11, but we did not test the higher creek way up here at like 14. And I don't know whether or not people need to agree with that. I think it's your own prerogative. You just decide if you want to agree with that or not. But I find it to be a bit silly that we wouldn't test it at some point pretty soon because it's a very, very massive trend that we just haven't checked. It was so massive that it was checked in that buy button removal, right? And then was later tested 1, 2, 3 times before it finally kind of like jumped over it. And it's hard for me to think that we won't come back and check it before doing anything else crazy, you know? Like, it's just right there. We were kind of moving up towards it, and then we went the other way. So if we get another buy-in and the price reverses and heads up, I think that's where we're going to go. I think it's pretty clear. That doesn't mean we're going to go farther. I just think that's where we're going to go to start. And then the same thing downside though is kind of sucky, and this is where the dollar target eventually came into play. People are like, do not like that target. I do not like that target. But if this ends up being a big widening and it breaks down, it's gonna go really low. You know what I mean? It's gonna be likely very, very low. It's essentially like an inversion of what happened over here. And this is the other big one, that creek from the push up that happened in August of 2020 and that pullback that happened after the buy button removal. We've never checked it. And I know there's people that are going to say we have, and they're going to have completely different lines. I don't know what to tell you except that that's not my line. Like, that's not my chart line. And the one that's getting me right now is the two tops here. I think these guys really solidified in my brain that I got the right channels. Because before that point, I was drawing these down channels in a number of ways, and everybody has different ones, and you're like, well, I don't know who to believe. Because they're good. They're all good points. Like, they're points of interest, you know, where you've got resistance and support. But this one, to me, is a really big deal. It's kind of like the last gasp here. I think that pump up that they made was significant for that reason. And I think it indicates the downward and upward cross. So there's an upward cross and a downward cross that happened right on that marker. So there's an uptrend and there's a downtrend. I think that was the reason we went exactly as high as we did. When we did it, it was kind of weird, but point is that when I look back on it, if that is the parallel, then no. Like, we're kind of sitting right now on where you can see it. That's where the reaccumulation happened before the push in January. We're sitting on that right now. That's a possible bottom, but you can see with the volume, it kind of makes that case. But there's also this sense of like, well, wait a minute, you know, if this moved from A to B and this moved from A to B, and then you go from there forward, it's like crap. You know, if we do go up and test 14, we could be in for a dip. And that would make sense, kind of a widening drop. So it's a big one. It could explain a lot of the buy-in that we're getting. It could end up being that we get this big pump and then it drops really fast. And that kind of stuff leads me back to stuff like here, where back in March, where you had that push up, then you made that spring action, comes lower, and then it ripped. And that was a huge move. 100 and what? 60% or something, right? If I remember right. I mean, it was a big move. So this kind of crap has happened on AMC before, where we've had like a massive move and then it's redistributed down. I think it's bizarre, but it's totally possible. With AMC, like, that kind of a massive hook would actually make a lot of sense here. If the desire is to drive it down lower, because they would need to come up high to really get sellers selling off. Just look at the amount of volume that's already been traded right here. I think you need to go distribute. So when do I have it? Basically, like, there's a time period between January 3rd and January 12th. That seems likely to me. You know, as the crow flies, if you were to keep going straight from here, you could get there by Christmassy time, right around December 27th, but I don't think that's necessarily what happens. You know what I mean? That's just sort of a guessing game. There's a major creek body that happens to be right there as well, and that's I don't know what that is. Oh, I think that was from earlier. If you look at this in like regular hours, I think it's on like the daily. You could switch over to daily and it gets rid of the extended hours. There's a creek that comes from the high in regular traded hours. You can see it right here. If you go backwards towards that July top, and then you go through the top in August 14th, and you can see that also intersects kind of right where those trends converge, right around the same time. It's in early January. So it would be a way to come up and test like multiple places all at once. You'd be testing this uptrend, probably confirming it, you know, as rejection. If we're thinking it distributes, you'd be testing this downward creek, which might seem really minor to some folks, but that's a very common check that we make when we break down. We do it almost all the time. So it's another one of those ones that's like, yeah, I get that it's kind of weird, but totally happens all the time. We'll be checking this supply level, this area that we kind of created a supply drop from like 1440 down to 1380 back in September. It's that macro creek tech that I think that's the most important, and it's the one that I think I would consider the most important. So that's all. Yeah. There's no fundamental case. Somebody just asked, Alex asked, do you think the shorts double down? I don't believe there's a real fundamental case now to drive this price to 1. And I made a point in the video that I did. It was kind of an inflammatory comment to say like, hey, I think we could go to $1. But I made a point to say like, it doesn't seem likely to me. It's just a technical target. It's a target of a trend that's being mirrored seemingly, and it's probably not going to be mirrored forever. And I don't think it's going to do exactly the same thing. I'm being very honest when I say that I think that it's far more likely that if we drop, okay, there's 2 targets that I have in mind. One is 490, which is a very clear intersection of a lot of major Cattier Creek things that I do. It's a weird thing, but it does tend to work out pretty well, okay? And I've also found that 490 is another, like there's a lot of things there. So 490 is just an area that you got a lot of convergence of different things. But I don't think it's out of the question if this pumps first that we could see it slide down pretty low. Like it could get to this other creek test in like the 350 area, and it would be very odd because it would be like some weird, I mean, could you imagine if it set up a range between like 250 and 350? I think people would flip out because, at least I would, because those were the targets that I had like a long time ago, and it almost doesn't make sense to me. But I will say that, hey, if it came down there, that at least I have more of a technical basis than anything else. I think the idea of coming to $1 is kind of ludicrous. In the end, it's like silly. I'm just saying that I think it's possible from a technical standpoint. From a fundamental standpoint, makes little to no sense. Like, so will bears accomplish that? Probably not. You know what I mean? Are they getting an inverted squeeze kind of moment here? Maybe. So if the goal is to kind of squeeze out retail, you got to think, and I think about this quite a bit. It's kind of hurts my head, but you got to think like shorts who have been short on this since 72. This is a long time to like trade this stock. You flip the chart upside down and you're looking at this and it's like, imagine if this was bullish, how many bulls do you think would be in this? You know what I mean? It's quite a bit. It's not exactly flat, but it's a very long-term uptrend. And it's hard to imagine that with a breakout like this, you can just kind of see it in the volume. Like, yeah, I know that bulls are going to take advantage as much as they can and try to drive the price back to reasonable, levels. I think at least coming back down here to get that check seems likely at 14. That just doesn't seem as silly then to think like, well, it could rocket the other way. Because you think about how many shorts were in this, over time. So I know it seems a little crazy to think $1 is even possible. And I know that. But I don't find it to be that strange if you start thinking about just how long. It's been 2 years of this. And the idea that the short operators, you add up all the volume, over that time, these short operators could have an absurd amount of shorts. And it's not just shorts, it's other things too. But yeah, it really does look a lot like an inverted squeeze, when you look at it from that point of view. But then, you know, you think about things like, well, shoot, man, if it goes to $1, it would have to be like on the move and get there by February or something. And that just doesn't seem likely. It seems silly. But I bet shorts thought the same thing too when it was at $1.92 and then it ran to $72. They probably thought that seems pretty darn unlikely. That's not going to happen. You know what I mean? So I don't know. You know, I think based on where it is, what seems really probable to me is that we could see 14. We could probably see like 30 something. This is another shelf that seems pretty important. We may be able to see like 30 something. I don't think there's any way that this goes like much faster than that, all the way up to, you know, previous, what we call like bottom, but highs, right? Or like 180s. It just depends. If I look at it upside down, it kind of scares me. It makes me wonder if this is like a spring, you know, in reverse, which would be like an upthrust. Because it does have that back test, and then it just continues, rides up to the top. In which case, this could just be like an SOS, you know. It's kind of scary to think about, but in reverse. So yeah, that would definitely be a way to get you way up to 1. And I think the same thing could be said here, though, is that if this is a bottom and this is a high, then this is a pushback down. And as long as you hold that creek, you know, you're going to be fine. We're just not there yet. It's too early. And I made the video because I felt like the case was there, so I just wanted to bring it up. That doesn't mean I personally believe it's very probable. I tend to agree with people at this point who think that that's fundamentally silly, and I think it is. Because I don't think movie theaters are going bankrupt forever. I think AMC needs to do more to get out of debt and to have income streams. But I think it's being positioned right now for the next big thing. So I think part of the reason we dropped here probably is to position ourselves for the next earnings report, you know. We've had really good earnings reports that resulted in downside. They basically have been sell the news kind of stuff. But they're good earnings reports, you know. So when I look at something like that, I kind of feel like the narrative might be a bit inverted in order to kind of accumulate. Yeah. Some people are talking about news of dilution and stuff. I agree. We could easily get news that the offering is finished, that it's been completed, and then it could end up rocketing, you know. It doesn't always happen, but it does happen sometimes. So I actually have to get going. So I've been kind of delaying because I'm enjoying kind of just chilling out after the market close. Good day for AMC on the whole. Looks pretty strong. Just needed to hold 729 tomorrow. I'm a bit indifferent on SPY. I think it could go either way, but I'm kind of watching that. And the only other chart I talked about today was ChargePoint. I know a lot of people don't care about that, but I still think it's a really good long-term trade back up to $5 to $10. So I'm for it. I hope you guys have a good one. And I got to get going. Oh, yeah, I can send you a link for Discord. It's a small group. Probably going to have to start, like, being a little bit more picky, I guess, about how many people come in. Because I want to keep it around 100 max. But I'll post the link if you're welcome to try to join up. You just have to read through the rules and agree to them. So, yep. But appreciate y'all. I hope you have a good one. Talk to you later.